Hello, 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 everyone. How is everyone doing? Did you survive the day? Did you try to buy the dip all the way down? I hope not. All right. So, I thought we were going to 420 today. Oh, I don't know what happened. Good afternoon, George. Good afternoon, Patrick. Good afternoon, Davey. CPI opened the elevator doors from The Shining. It did that and more. It was sort of Red Room today. Hey, Options 22. Hey, welcome, Lori KH. What a day. Yes, it was. What a day. Welcome to the live stream. I wonder if we'll see Mr. Stock always go up on today's call. He was on this morning. It was a fun day. It was a fun day at that. Waiting for Bob to join. Until then, since we didn't really get to it this morning, since we were rushed to get out the information, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers, you know what to do. Leave some comments and like the videos. All right, that is out of the way. So, we've already talked about inflation this morning. We'll talk about it more this afternoon. Nothing else on the deck that was really surprising. I mean, you see the API crude oil stock change, a bigger announcement. What was the leak or the announcement from the Biden administration may start trying to fill the strategic reserves at $80 a barrel. Like, that's a good thing to announce. Here's your heat map. Here's your heat map. It's just like, where's Waldo? Where's Green? Oh, well, Twitter, they voted to seal the deal with Elon. And you got a couple little green stuff down here in basic materials. Other than that, it is a sea of red. Amazon down 7%. Apple close to 6%. Microsoft 5.5%. Google close to 6%. What a day. Fed Watch, we'll get Bob on in a second because they're really ramping up. One full 100 basis points now up to 34%. So we know that 75 is baked in. Not that they could, we discussed that before, like they were only going to go less than 75 with the ECB in Canada doing 75. Are they going to do the 100? We got Nick Timoros, maybe setting the stage for it. We'll get Bob's take on that. I'm not fully sold on it yet. I think they're more likely to do 75 and then stress that they might do 75 again in November. We're definitely still in negative gamma territory. So that's where we sit with that. Oh, by the way, not that it really matters. There's nothing going to really move the markets. I didn't even get a chance. The only thing I was going to look at was LightPath Technologies. And tomorrow before the open, nothing. Just tomorrow after the close, remember, Adobe. All right. Now that is a bar. That is a bar. Not the kind the bulls want to see. Let's just bring on the magic Bob button.
That is a bar.
That is a bar. Not the kind of bar you want to cozy on up to.
What chart is that?
Let's see. I don't even know. Oh boy. Hey, Waka Waka. This was a day for the Bears. So, did you try to buy the dip all day, Bob?
No, I actually tried to take Tom's advice, but I just don't like his advice. So I didn't take it, and it worked out great.
Oh, this sure wiped out what? On a closing basis, the whole rally.
Yeah. The whole rally's gone.
So, and it's gone. By the way, I forgot to go, and it's go. I forgot to go over, since we're talking. We'll touch on CPI, but we have PPI. If PPI comes in slightly better, do we get a little bounce back rally because people are is that just insane at this point? That's really all that's on the table for tomorrow. So we're going to get Bob's thoughts on everything. So hit it, Bob.
Just hit it. I don't think PPI will do much because it last month it was down 5 and it's expected to bounce a little bit at down 0.1. So if we see PPI worse than down 0.5, yeah, I guess you can kind of project that out. But as you see in the CME Fed Watch tool, they're now trying to. I don't think 100 is going to happen. You said you're not sold on it. I'm pretty sold that it's not going to be 100. I actually just wrote an article for the CME group, and I'll tweet it out as soon as they've edited it and made it safe for a large firm to send out. Wondering if the Fed was going to be um, Mike Tyson or Floyd Mayweather. Now, 100 basis points would be them trying to be Mike Tyson. Right now, you kind of argue that, Mayweather used to kind of feel boxers out in the beginning, and then he would go on defense and win with little tap punches and score points, and he ended up undefeated. Tyson just went. I mean, if he didn't knock somebody out in the first 2 rounds, he was swinging harder in the third. And that's kind of like what the Fed would be doing if they did 100. I don't see that as the Fed's personality at all, at all. So I don't see 100. I'm not even a believer in 75 in November, quite frankly. I would just have been a believer for a long time that they weren't pausing after 75 in September. I think they would go 75, 50, 25 and pause. I could see that. But if you look across the whole curve, about 148 basis points is now being priced into the forward curve of the market. So from where we are today, so that actually fits with 75, 50, and then 25, but that's not why I said it. It's actually Nancy Davis on Twitter who's going to be a guest. She's actually bumping Mike on the first Friday of October. She's the one who tweeted that out. And that's why we might be doing an extra show in October to get Mike's technical stuff out there because it's just getting really, really popular, not just from you guys, but on the Spotify channel as well. So anyway, the inflation figures again prove Tom's just a moron. And when you look at the way that this kind of wiped out 4 of the 5 days or 3 of the 4 days, I should say, in the up move, that's a real move. That's not a move where you go, okay, it'll rebound and turn back tomorrow. It could, but I doubt it would do it over PPI. And since the Fed is in the quiet period right now, you're not likely to see anybody come out. I mean, you could almost say, I don't want to say the Fed knew this number was bad. I don't. But you can say that people believed the Fed, but positioned themselves like the data was going to cooperate and the data would force the Fed to slow down. And now the data is not cooperating. And it's really interesting because pretty much every aspect of CPI went up, shelter went up, and then there's some built-in unintended consequences to these rate hikes. I mean, if you've got shelter still going up, granted owner equivalent rent, which is the way they measure some of the shelter costs, is kind of stupid. Asking what you would pay to live in your own house. I mean, everybody would pay much more theoretically than probably somebody else would pay because it's your friggin' house. So you generally like it. But still, the shelter costs are going higher. And the interesting sort of blowback from rate hikes is it certainly does not include building homes. If you look at the way the home builders performed, they're not going to rush out, borrow money, and build homes into this environment. So it's not you're certainly not going to have just an absolute glut of new homes coming in the market that's going to ease those costs. So that's kind of one of the. In this case, I think it's kind of an intended consequence because they want to slow the housing market down. They want to slow the labor market down. That's what I believe they want to do. They want to see worse labor numbers, and then they'll calm down. I don't even think falling or, you got to know the difference between deflation and disinflation. Disinflation is basically just inflation falling or rising at a slower pace. So if inflation was up 0.3% last month, and it's up 0.2 the month after that, and then up 0.1, and then down -1, that's disinflation. And then deflation is just lower prices, period. So technology is a deflationary force because it reduces prices on goods that are now made more efficiently. But from that perspective, housing markets themselves, we will now have less supply of new homes going forward. And the only thing that's going to solve that now is fewer people trying to buy homes, which means job losses. So to me, the recession, I've been saying I expected one, but I didn't think it was guaranteed. I think it's guaranteed. And also, because I think the recession will come quickly, I think we'll be in the midst of stagflation, which is what I've told you guys I worry about more than anything.
Well, what's concerning me is the amount of the services inflation that's getting entrenched,
Yeah.
because they need the unemployment rate to rise. And if they're only talking about it rising 1%, services, we're such a broad based services economy now. You're going to get layoffs, but is that going to be enough to really start taming all of these wage increases? Yeah, some people are going to lose their jobs, but a lot these wage increases, as you've talked about before, aren't magically going away. And if you have rising unemployment, yeah, you're going to get some people laid off, but it's embedded everywhere. I mean,
Yeah.
the Fred graph? Look at, I mean, this. So you
Yeah.
got goods, made personal consumption. All right, a slight little dip in that, but look at services.
Yeah.
I
And that's the problem, because as these service companies lose jobs, you need 1.5 times the drop in demand for those services in order to actually get weakening of those prices. And because they're so labor focused. So, a lot of them, you consider, like, the services figure includes a lot of the gig economy now, right? And so if you have fewer people buying the services of somebody, then labor inflation theoretically comes down. But when you fire people, you don't bring wages down. Um, as a matter of fact, if you're firing lower end worker, there's a brief blip up in the data. So yeah, it's a huge problem, Mike. You're dead on.
I so I mean, this is where I still, and my head because the people I talked to today on the they're we're still literally at Fed pause. They're still harping on Fed pause because, and I mean, my head almost exploded because now they're saying, well, housing is lagging and everything, so the Fed should still pause. It's like they can't get it through their head that Fed can't pause yet. Yes, there is lagging stuff going in here. But what if the Fed pause, just like yeah, we may have had peak inflation, but even this running at 8.3%, let's even say it ran, like people were saying, if it ran at 7.9, we would have got your ripped face off rally. Like, that is still tame inflation when it's built into services. And we're still, oh, housing's lagging, it's rolling over, so the Fed should start thinking about pausing. And what? We're going to sit with services inflation being around 8%, and then what?
Yeah.
I,
And
I
that's
don't
the
know what to
problem.
say.
You can blend those two together. You can have drops in every single bit of goods. And if we have services inflation, even at 7.5%, you're going to see headline inflation at 3.5%, which is still 1.5 times the Fed's 2% target. So Sterling put something up from the co-CIO of Bridgewater. That's the only solution to inflation that I see right now, is Jensen's opinion of that inflation, of what the result is going to be. That's the only solution I see, is a prolonged recession. So, and again, we've said this before, recession isn't necessarily bad for stocks. And to Mike's other research that he did, that he's brought up a bunch of times that I've been in these live streams, is that stocks generally don't start going up until we've bottomed on the inversion, gone positive on the inversion, and have started to move solidly positive on the 2s10s yield curve spread. And it got way worse today, way worse. So it was 21. I think we closed around 35 or 38, something like that. But it settled yesterday at 21 negative.
Yeah, this is. I mean, this is we were heading back up, but now we're retracing a bit. So again, I'm really focused on once we pass that zero line, but this brought us farther from passing that zero line.
Yeah. Yeah.
It,
And
it,
approach
it,
channels flattened out now.
and if you're looking to, this is where, unless the market throws out everything, because again, long-term systems, medium-term systems, stuff based off the percent increase in continuing jobless claims, getting it, uh, stuff that, okay, we have a major 10-2 inversion, and unless that's all thrown out the window, we're not at a bottom yet.
Mhm.
Unless this market does something. Even I retweeted yesterday this, because people are again calling for the June market bottoms, and this would be the first ever market bottom in the S&P where PEs are above 18 before it bottomed. So this market has to do something complete, and I'm not saying it's not possible. That's why nothing's 100%. However, it would have to fly in the face of so many different things that I'm not betting against the probabilities.
Right.
I'd have to be a moron to bet against. Yeah, could a 1% anything happen? Yeah, but am I going to bet against the 99 for the 1%? No. So, uh, so what other thoughts do you have, Bob? Oh, crude, the Biden administration. What was it? $80 to refill the strategic.
Yeah. Yeah.
I almost fell on my chair when I read that.
Yeah. I don't, I mean, that's not much of a bargain at all with the exchange. I mean, generally, that's going to discourage oil companies in the future to do these exchanges because they have to bid for them. And, people got all upset that some of that SPR, I was talking to Sterling a little bit about this, that some of that SPR went to foreign countries, but that's just a function of um, the process of legalizing the export of crude. It's just a function of that. So when we legalized the export of crude as opposed to just the export of distillates, it now became possible for foreign entities to apply for those exchanges, right, from the SPR. So from that perspective, it wasn't that strange, right? But refilling the SPR basically at the price they're going to be refilled at, we might lose money on this, which is never really the case. That's never really happened.
Uh,
Oh
Again,
my God.
my head just spins every day. Let's see, what does Sterling have to say? Bob, per Bloomberg, sales of bonds backed by debt associated with single-family rentals are retreating from record levels. What does this pullback in sales of these bonds signal?
Well, I mean, I think it's a little bit of theater of the obvious as to what it signals. Pulling back from those bonds means continued higher rents, really, or they're not going to get financed. So, but I don't know. I don't really watch specific asset backed bonds. I just kind of watch bonds in general. But, when you have an environment where yields are going higher, generally all yields go higher. So they're demanding more yield from there. But it'll be harder and harder to sell those things, which means they've got to be priced better, which means the rents that are in there have to be backed by more credit worthy renters. That's generally what that means. None of this is good for the cost of housing. That's the thing. None of this is. You have to see some effect. If you don't start seeing effect on employment, this is a problem without a solution.
So, should we buy the dip?
Oh, that's Tom. Um,
Thoughts? Dollar went on a rip your face off rally today. Any thoughts on the after this pullback in the dollar and a strong reversal today. Any thoughts on the dollar?
Yeah, I mean, biggest move. So I said last week that the Fed was kind of painted into a corner by the Bank of Canada and the ECB, but I didn't think they'd be pricing in 100 basis points, which that's what this is. When you see a dollar move like this, I mean, the dollar was up against everything. The dollar was up 1.16% against the yen, 1.4% against the Canadian dollar, 1.48% against the euro, close to 2% against the pound, over 2% against both the Kiwi and the Aussie dollar. It was up against everything. And that's it. When that happens, it's interest rate differentials. That's what it is. So this is just the rest of the market covering some of the other central banks being as aggressive as the dollar and pricing in the Fed being the most aggressive on the planet. And the dollar is it's an absolute wrecking ball going through emerging markets and countries that need to finance their current account deficits with their US dollar denominated assets. I mean, we talk about yields driving the dollar and the dollar driving yields, but you take a country like Japan that has a current account deficit, then they're going to need to finance energy purchases with the sale of US treasuries. And if the yen is weaker, they have to sell more of them, making the dollar stronger and the yen even weaker. It's just this spiral that, I mean, they have to sell treasuries. And there's more than one economy like that. Japan's the one that sticks out. I'm going to look up. There's one other major one I was looking at the other day, but Japan's the one that sticks out.
What was this? Waka Waka. Market was down, but the second news broke on China sanctions market just dumped and kept dumping. Russia killed the bull run. Doing this to China will kill the U.S. economy.
I don't know how that works.
I don't. You got to elaborate there, Waka Waka. Rich
Broken
thinks 100 basis points is a must now.
China sanctions market. I don't understand what that means.
Turkey. I don't know. Maybe I missed something out there today with all this. Blinded by the sea of red. So any other macro thoughts based off
Yeah,
of?
actually, somebody was asking about the war. Who was that?
Oh, that was options 22. Yes, we had to retouch on the war question from this morning.
Options, you still here?
I know he was here earlier. Oh, hold on. Bob, curious how here we go. Sorry, I missed the comment. They were scrolling by too quick. Bob, curious. How will the end of the war impact the market? Ukraine winning. This assumes Putin gives up and does not use unconventional weapons.
All right, so that's basically it. That's my take on it. Ukraine's making some dramatic advances. They might even be able to take back parts of Donetsk, which Russia actually took in 2014. They've been eyeing that, and they're able to hit targets there now. Russia's in, I wouldn't say full retreat, but they're in retreat. And the issue with it, though, is the long-term damage in Ukraine allows very little relief from some of the pain caused directly by that war initially. Okay. What it will do is it will spark business in the US that will get no bid contracts from NATO and the government to go there and help rebuild. And it would behoove us to find what companies those are. I suspect one might be Halliburton, but I don't even know what they would go there and do. They just always get those. But that's really where you're going to see an effect from a perspective of a lot of their grain transport was irreparably damaged. Not all of it. Mining damaged, not all of it. The biggest issue I have with the war right now, and honestly with Ukraine winning, I don't have a dog in that fight. I don't know who's right and who's wrong. I think Russia and specifically Putin will do something unconventional, and I don't know what that is. So the answer is I think we've already seen a decent amount of the drop in commodity prices that we may see if the war actually ends. If there's a peaceful conclusion to the war, then you could see a little bit more movement lower. But I don't know, man. I don't know. I think Putin will do something nutty, and that'll be horrible for a lot of markets. I really do.
Yeah, I just don't see him going quietly into the night.
I don't either. I don't either, especially as tight as he's getting with China.
Yeah, it's not just like, oh, sorry, guess we're gonna just leave it be. It's all over. I don't see that happening.
Hey, look at Daniel's comment. That set up like the mafia. I love it.
What? Most large government contractors just manage subcontractors?
That's like the boss managing capos and the capos managing street soldiers, and then the boss never goes to jail, and very rarely the capos do. But the money still ends up with the don. So anyway,
Yeah, I think we've had, again, tied in the war. We've had all, Ukraine's just gonna kick Russia out, blah 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 blah. And Putin's gonna suddenly just step down. No,
right.
no, I'm just not seeing it. It's actually
Oh,
the more Ukraine just keeps making strides forward. I think at some point there'll be a desperation play.
yep, I agree.
And it's not, and China Russia pact is strong and growing stronger, so I don't see that just disappear, the whole sort of that alliance just disappearing and Russia giving up from that perspective either.
Yeah.
So
Daniel, I hope you stick around. It'll be interesting hearing from you with your 25 years of experience. That's very cool.
yeah, 25 years in government contracting. Oh boy, Coco, you've really gone to the dark side. I'm ready to buy some delicious dips.
Today wasn't delicious enough, Coco. What
Yeah, you
happened?
can start buying it now.
Not enough on that sauce for today's dip.
Rich is going to buy the dip when Peloton hits zero.
We could have bought. There were so many dips. He's waiting on delicious dips. I don't know what a delicious dip is. I'm
Uh,
sorry. What did you say, Mike?
Rich is waiting to buy the dip when Peloton hits zero.
That's the dip you want.
I'm waiting to buy the dip when we don't have the inane comments about markets always go up appear in the live stream.
I I actually have lost a friend this past week. Not to death or anything crazy like this, but this particular friend quoted his Peloton instructor. And I said, that's it. We're over. We are no longer friends. He literally started the text with, as my Peloton instructor always says, life is just a bowl of warm noodle. I'm like, stop. I'm not listening to you. We're no longer friends.
So I should not quote Peloton instructors.
I'm barely your friend now because you keep saying speakies. That's difficult enough for me to deal with.
I say Fed speakies.
Yeah, God, I hate that so much.
So I'll say it more then.
I know you will. I know you will.
It brings some lightness, some airiness to the stream.
It weighs on me. It doesn't bring a lightness. It just weighs on my shoulders.
Oh boy, if that's the only thing weighing on your shoulders, then
That's I got a pretty good life, don't I?
yeah, then I was gonna say, Mr. Naples,
It is cozy down there.
you know, and it'll be cold and dreary here soon enough, and you'll still be languishing in the sun.
And plus, there's no bail for second degree murder. So there you go.
Don't even start me. Don't. Don't. Oh boy. Well, I've been polishing up my collection, so
There you go.
it's the only thing you can do.
All right, guys.
Uh,
For me.
And I don't see. George just said Russia hasn't given us all they have, and I'm not even talking about nukes.
That George may be right. I don't know. I
Well,
mean, you may be right.
all I know is it's. I would be shocked again if it goes quietly into the night. I don't see that happening. I don't see it just wrapping up anywhere soon, and I
Oh,
can't base. I can't even base speculation on that to plot out a move because it would
so
just be. It would just be a short term thing versus it trading a rumor versus what's actually happening until it's confirmed.
right. I totally agree.
Not saying it will happen, but the 7% circuit breaker on the downside in the S&P is 7% down from the high of the day, the open of the day, or from the close of the previous day. That's a question.
What,
I
right. Say that
Where
again.
do the how the circuit breakers in the S&P? Sterling's asking. I have to look that up. It's not something I
I'm,
have.
yeah, it's not something I have handy either.
I'll have to look that up. It's, I mean, how often do we hit circuit breakers? It's not something I sit around and focus
Yeah.
on every day. So I'll have to double check that. So Bob and Mike, are you short? If not, when will you short or waiting for the ops to buy?
There's another wild card out there, and this is this rail strike.
Oh yeah.
So, yeah, so I'm not really, I'm participating much more in commodities than in equities right now. Like I'm short crude oil, I'm short gold still. Today helped. In last week's podcast, I told everyone how I had moved my stop based on Mike scolding me in the previous week's podcast for losing my discipline, my target discipline, not my stop or my risk discipline. So, but I didn't get stopped out on the adjusted stop yet, but I'm not really looking to buy equities. The last equity trade I bought was there in mid to late July when we broke out of that sideways channel. It's on the screen right now. And we got up to, I think if I'm going off memory, it was like 41.50 or 42.50 was my target. And I got out. And then Coco shorted it and he got stopped out and said that he would buy every dip going forward and doesn't look good on the chart. Anyway,
So let's see. Raj 77% from previous close. Yes, and it must be during the traditional trading hours. Why am I always laughing after the market? The market did. This was not a crash.
again, it's not a crash, number one. Number two,
Oh,
he's laughing at you.
this
He's
is
not
not a
laughing at the
crash.
market. He's laughing at you.
Okay, this you'll know. First of all, if we're gonna have a crash, we're gonna hit the circuit breakers.
Mm,
That's the first thing. Talk to me when we started hitting circuit breakers. This is the what? We've had multiple over 3% pullbacks this year, and none of them have been crashes.
And I'll tell you what else. You want to buy the dips. You don't want to buy the crashes. So I'm telling you, if these have all been crashes, it's like you don't want to buy crashes. You can buy dips. And you're always talking about buying dips. Coco wants an example of a market crash.
Uh, the closest we got was back in recent history was back in 2008 with the
Yeah.
Lehman stuff. The closest we got. Uh, since then, before then, I mean, when was the last time we hit circuit breakers?
I
It
want to say 97.
it's been,
No.
yeah, it's been forever.
We might have hit them during the 2001, but I remember we hit them during the Asian currency crisis
Yeah,
that
we
led
did.
into
I remember that exactly. Well, we did hit circuit breakers then.
yeah. Um,
Circuit breakers are rarely hit. A crash is not. This was orderly sell. This is where I hate people throwing around the term crash. This was very orderly selling today. Okay,
Yep.
because look, sell off, yes, then dribble down, then the lunchtime European close, sort of counter move, and then this was not a crash. It was just very orderly selling. When we go no bid, then you're talking crash.
Right.
We did not go no bid. We had the bids being taken out with the CPI number from the algos just smacking everything. But we did not go no bid.
October 19th, 1987, down 22.6% in one day. That's a crash. How about October 29th, 1929, down 11% in one day? Let's go more recent. 2008, down 7.87%
That's
in one day.
yeah, and that was the last thing that in recent memory that jumped out that I other than prior that was the art where they were convening all the bank heads because Lehman was just gone.
Those were the Dow, by the way. December 1st, 2008, down 8.93% in the S&P in one day. How about NASDAQ in December 1st? October 15th, 2008. NASDAQ down 9.27% in one day.
Yeah, then
Those are crashes.
yep.
And those are settlement prices, by the way. Those are settlements. So we were actually lower than that during the day. I like that, Coco. That makes sense.
Yeah, I go more. That's probably one of the smarter things you've said recently, Coco. When market starts to trade like a penny stock, again, when you see people just throwing up their hands and I'm no bid. I don't even want anything to do with this thing.
Mm-hmm.
When it's goes no bid, again, that's the closest thing I can think. When the market, when you start people saying what's your bid? Nothing. I'm not stepping in front of this.
I'm going to read this tweet, Mike, and then I'll put the chart up to the. You know what? I'll text you the chart while I'm reading the tweet. This is from Cameron Dawson, who I've said before. I've said it everywhere that if you don't follow Cameron Dawson, you're not a serious person. You're not seriously interested in markets. Let's see, spec. I got to send this to Mike. What she said was, and this goes to what Mike has been talking about, wages and services inflation are tied at the hip. That's why services CPI is so sticky, because wages are sticky. This is why the Fed is willing to see higher unemployment to ease labor market and wage pressures. There is your tie between the Atlanta Fed wage growth tracker, and CPI services, the services part of CPI.
Yeah, I mean it's plain as day.
Mm-hmm.
But that's why I don't necessarily think even a 1% bump in unemployment is gonna fully knock this out.
Yep.
So that's what I'm more worried about. Or it's gonna have to be very long and sort of painful, where people are just hunkering down and it's we're gonna need a big reset.
Oh, the Great Reset.
Not the great reset, a bigger reset. Mike and Bob, please refresh my memory. Your best guess bottom targets on S&P and Nasdaq. I hate that bottom target question. My
Yeah.
because I have targets along the way. I'll give you my target. Bob, do you want to give out yours? I mean, I
Yeah.
got mine already lined up.
Yeah. My target. Again, I talked about this at the end of last year, that I thought that we would see about 45% down from the highs of last year, which happened in December. So if I'm looking at 45% down, I'm just looking at this is the futures right now, then that would make my target approximately 2160 or so. on the S&P. Now, that's just what I said this year. If I'm looking at it now a little bit more constructively, I'd probably say 34.75 is a good interim target for the new lows if we get new lows. Again, I'm saying if we get new lows because I don't have any sort of crystal ball here.
My shorter term is 3,500 roughly. I would think we'll see a bounce about 3,550 to 3,600, and then we'll take out that. I think we'll see a pretty key divergence about 3,500. We'll get another bounce. My longer term targets, just from a technical perspective, is 3,160. From a fundamentals perspective, I'm about 2,900. And then my next technical target is 2,828. So if I had to give more of where I think we'll see a longer term bottom at this point, it would be 28 to 2,900. Could that change based off more data? Yes. But though I'm
So
targeting much lower prices from here.
Daniel threw up a couple of dates back to that reference question. Well, he threw up March 12th, 2020. The interesting part about that, March 12th, 2020, the S&P was down 9.9%. And then March 16th, it was down 10.39%. These are individual days. The interesting part about that area of time was that was within the context of a medium-term move that encompassed about 28% and a longer-term move, still maybe even medium-term still, of about 34%. So, yes, those are crash days, but it's weird because when it's in the context of a larger move like that, it's hard to even call those crashes. But yes, on a percentage basis, I would call those crash days, Daniel. Yes, I did say that. I did say that.
2,900, please, so I can fund kids 529s. So again, I'm down slightly sub 3K longer term at this point, and it could go lower. Wow, I just looked up Cameron Dawson. She's a CIO. Is this the one that's also a ballet dancer?
Yes, she was a ballet dancer. She's now a CIO.
So, all right. Rich's target is 3. Anything? I'm not going to go through individual stocks right now. So let's see. I think that's about it. I'm just going to go through.
Sterling says, Bob, you've said you're looking forward to taking out the
Oh.
June lows. You can start buying tech. Yeah, that's still theoretically my game plan. But, my point basically in saying that was, and by the way, volume was huge today. So we weren't restricted into like in the S&P by volume, wasn't like a low volume sell off. The volume was massive. Just glancing at my screen here, it's the biggest volume of this year. For that's in the futures
Yeah, it looks at no
It's in the
January.
contract.
Second, it looks like to be the second highest.
Yeah, January 24th was higher. Anyway, so looking at it from that perspective, yes. My point in saying that, though, Sterling, was I need the lows to be taken out before I'll look at tech. So I'm not saying that, hey, we got a new low, I'm going to start buying tech. And I'm also talking from a framework of buy and hold on some of these. So probably start scaling into some tech there.
And that all depends on. I hate these questions because it also depends on how we get there. Mm-hmm. Part of these levels are how we get there, not just if we hit them.
Yeah.
In these longer term things, I mean, it's one thing to say we hit it in let's say we have a massive downdraft and hit it in a couple. Let's say we hit 3K in October would be very different from hitting 3K next year sometime.
Right. Options 22, she's also an absolute sweet human being, by the way. So I don't just promote her because she's really smart in the market. She's a really good person. Like if you saw her on our podcast, instead of saying, oh shit, she went, oh sugar, I can't remember. She's just a really good human being, from what I know. All
So
right, guys, I gotta go.
are you gonna start saying "oh sugar"?
I am not. Why would I say that? What the fuck would I say that for?
See,
All
you
right.
ruined it. One more thing before you go, Bob. Thoughts about smart money and dumb money sentiment?
I think GameStop and all of that and crypto, I think that blew that whole argument out of the water. Sometimes the dumb money is the smart money and vice versa. So I don't look at it. So I don't really have an opinion. It's a little bit of a technical indicator. So Mike could possibly have some research on it, but I don't look at it.
All right. With that, will we see you again on Thursday?
You will.
Fantastic.
All right, guys. Cheers,
All right.
everybody.
Thanks. All right. Yeah, and if people want to know my long-term viewpoints and long-term positioning, just watch what I'm talking about with the medium to long-term sell indicators, because short-term can shift moment to moment. So there's very different, like last week, the buy signal, today the stops and the short signal. So there you go. But long term, as I talk about positioning stuff for long term, that's why I said some of the rallies are gifts for longer term positioning. And I've never changed my tune. I might fine tune levels a bit, but I haven't changed my longer term levels. And they've been sitting on these charts for a while. You can see them. I mean, I might the fundamental picture might change slightly. You know, my first thing from a fundamental perspective. Did I say that on the live stream or did I say that on a chat? I get hit by so many people with stuff. I'm looking for a bare minimum of 15. I think I said that on the live stream. 15 P to E ratio in the S&P, a minimum. All right, and right now I'm roughly looking at about a buck 92, 192 EPS. So where does that hit us? 15 times 192, and these can change. That's 2880. 2880. So 29. There you go. 15 times 192, 2880, 2900. This can modify slightly. This is not going to modify until I see how we get there. Once we start getting earnings compression. But 2880, 2900, can that change a bit? Yeah. 2828 is a key technical level. So it's very hard to call an absolute bottom in a bear market because it depends. Remember, the average, we're going to talk about a couple other things. Maybe we will just leave it at that today. I can show you what I'm looking at a couple levels. But the average bear market, the average is 37 from the highs, 37% down from the highs. A recessionary market is below that, and a deep recession is below that. 37 takes us to roughly 30.26 from the highs in the S&P. A deeper recession, let's say you get in around, look, I mean, the 2800 levels around 41. This is where could we theoretically take out 25, which would be a 47, which is not out of the book. But I'm going to start gauging it because I like to see how we get there, and timing is everything. Like was what I said to Bob. If we hit, let's say we had an absolute disaster sell-off between September and October, and we hit 3K in October. That's going to be very different than if we hit 3K next March. Two very different things. So that's why for longer term positioning, there is no, it's not like put on, from my perspective, it's not put on one bear trade and walk away like, oh, we're going to hit 2,800. Let me just put on a put spread, 4,000, 2,800 and walk away. No, that's not the way it really works. Because you get constant inputs. Just like, do you have? Let's say once we get to the bottom. Are you just going to say I'm going to put on one bull position and walk away? No, you're going to modify your positions. You're going to take some profits occasionally, even on longer term stocks, because things go through cycles. As things hit key levels, you're going to raise your stops. So it's not different in a bear market. That's why I have the short term and the longer term targets. And that's also why I look at things from a fundamental perspective to help keep those technical targets in mind, where they line up sort of technically and fundamentally, depending on how deep we go into a recession. I hope that makes sense. You mentioned a VIX close above 2586. 2586. Okay, I was off. 2587. Where'd that number come from? You tell me. This last pullback, you can use harmonics. I know there are earlier conversations about Tesla hitting key 62.5. If I've taught you, well, I hope I've taught you more than one thing, but if you walk away just learning one thing from me, don't use 61.8, use 62.5. 2587. I was watching that intraday. Got the close above it right here. Nice little pullback, and look how it traded back to that 50% harmonic with the rising 1 hour rotation zone, and then boom. With a little pullback into the close. So what do you think the next target was after this pullback? 87.5, 27.16, closing just above that. Now I also have on the lower harmonics. You could use reverse harmonics too. That is completely valid. I was using the full-blown harmonics, but the reverse harmonics are complete. So if you want to know if we continue this sell-off, what's the next key levels I'm targeting? 28.89 to 29.09. Already have my roadmap in place. Because we should see some kind of reaction there. Let's just review stuff real quick. Does that make sense, Sterling? Oh, you want the levels, the NASDAQ levels? My next key area for the NASDAQ is about 10,004, 10,350, 10,350 to 10,4, 10,440 is my next major level. Beyond that, I'm at 90, roughly 9173 is very key. So that's my next major NASDAQ level. What are your thoughts on Tesla holding up so well with the markets tanking? I was surprised it didn't lead the market down, and actually Apple to lead the market down. Tesla is a cult, Paul. It will be one of the last things to unravel, and when it does unravel, it will unravel fast and hard. Tesla, I literally know people who they take every penny they have and put it in one stock. And anything they make on trading or anything else, they take it and on dips, put it back in Tesla. They think literally Tesla is the bee's knees. Tesla is bulletproof. Tesla is where to put all your money. So that's why. I mean, I get hit all the time with Tesla, Tesla, Tesla. Every dip is to be bought with everything you have. And if you can scrounge together and borrow money and go on leverage, you buy it even more so. So it will be one of the last things to unravel. Because it's a cult stock above all else at this point. It's been that way for a long time, but even right now, that's why. from my perspective. Am I still thinking CPI to 12%? No, I actually think CPI's pretty much peaked in this area, but I think it's more entrenched. So it's going to be stickier a lot longer. That's the thing. And if what I think is what we're seeing with it entrenched in services and the wage spiral, you're going to have to either keep rates, you're going to have to keep rates elevated for a lot longer, and they might have to hike even if they were really set on getting it back below 2% or to 2%, they're going to have to hike more than they think longer term. Now, if they settle for a higher target, which would be very interesting. That we could get a pivot, but you know what? These people even celebrate. Even if we hit 7% year over year, that's so far away from 2%. That's even away from 3%. If you're citing 3%, that's where we're going to need to either have a decent pullback for a longer term period of time to really reset some of this inflation. Yeah, we had we still have the stuff. I don't even need Twitter's. I don't even need to comment on that with Elon and his. Did anybody see the back and forth from that with him with Grimes? That was shown his little exchange. Oh gosh, that was so funny. That was, I mean, anybody who thinks this guy is the smartest man in the room is, I don't know what to say about that. And I don't like, I mean, I'm just talking from, all right, you're signing a multi billion-dollar merger agreement. You better know what you're doing. So that's where it gets a little, I don't need to talk about it anymore. But, that's overall, I'll get the hate emails showing up just based off my comments from before. So I was just looking for something. I can't find it right now. Oh well. Oh, here it is. This is after the agreement signed. But because we had all the discovery with is what's going on in Delaware courts, and they had to turn over the tweets to be super clear. The deal moves forward if it passes due diligence. Dude, you signed the agreement and you waive due diligence. Essentially, you do that before you sign the agreement. Okay, I don't know how much clearer to make that. Even I'm smart enough to know that. So I wouldn't sign a contract worth $100 without me doing a little research, let alone a multi-billion-dollar contract without me making sure everything was dotted and crossed. I think Amazon's going to pull back too. I've said that. I think Amazon has still. I mean, Tesla's builds cars, and don't give me any of the BS about FSD because you already have multiple operators operating FSD, and it's not a Tesla, and they're not doing it with camera based only. Okay, so that and all this other crap that's priced into these models is just ludicrous. I might as well just light stuff up because I'm already going to get the hate mail. So Amazon, yeah, I think especially the retail stuff's gonna hurt. The stuff they have going for them is their cloud-based services, and I think that's still gonna pull back. I think Amazon's gonna pull back, but Amazon does not have the cult following. I'm not. Amazon's tradable at key times to the long side, but it's not an investment at these levels. I think that's even going to pull back, especially from a recessionary point of view. I think Amazon's way better run than Tesla because they've already, over the past couple months, been killing warehouse deals, downsizing. They're already getting entrenched for what they see a recession coming. They didn't keep expanding. They didn't keep opening new warehouses going into this recessionary period. They've actually been cutting back. Now, I still expect Amazon's stock price to be a lot lower in the next few months, a lot lower. I expect a number of these stocks to be a lot lower. Not just that, I've talked about that with. I was just glancing that little horribly sloppy double, by the way, in Nvidia ended today. By the way, overall SMH next target is back to about 196. Would not stand in front of this freight train. Where else was I thinking about? Oh, I talked about stuff with value stocks not being value stocks. I'll give you an example. All right, this is traditionally a value stock, a staple play. Coca-Cola. You think I'm aggressively going to get anything long term with Coke? Look at the little PE ratio above my head. Yeah, and it's consumer based, and yeah, they have some area that they could pass it on in a moderate amount to consumers because a lot of the stuff people consider. I don't think Coke is a staple, or even bottled water, because there's other ways around that, or any of their other food products, food not a food product. But would I be aggressively trying to scoop up a ton of, from just a purely fundamental standpoint? Am I trying to scoop up a bunch of Coca-Cola going into recessionary period where consumers got to dial it back at a PE of 28? Not on your life. So do a lot of things have room to pull back? Yeah. I'm not just picking on a couple things. Here's a clear example of something I wouldn't be chasing down the street with my money. Oh, let me buy Coke. Let me buy Coke. It's not a good deal. No, the 210s have not. They actually pulled back. No, we're nowhere near the zero line. AWS is not going away. AWS will get have a pullback. Okay, with the recessionary period, with from a corporate standpoint, but AWS is not going away. Too many companies are entrenched in it. So they do have a bit of leverage there because it's pretty hard to change web services, even though even Oracle's making still growth into from their earnings. You know, one of the things they're stressing is the contracts they've nailed, but it's not necessarily taking it away from one of these cloud services to the other. So you've got more companies going into this, into the web. Now that's going to drastically slow down. And that's going to kill some of the growth narrative for Amazon, and you're going to see the much bigger pullback. Okay? I won't be surprised to see Amazon easily return to $100. Easily without batting an eye. Okay? That's easy. The next level below there, I think, will return to 80. Oh, and that's not short term. That's over the next few. That could be a while. And we will still get bullish pops in it. So, Beyond, I did not even look at Beyond. Again, once we see these things getting severely hit, once we see things like Beyond really getting hit, I mean, it's got no PE yet. This thing should be well closer to zero. But people are still buying this crap. Once we see ARC trading, what, below 25, we'll be a lot closer to the bottom. You are short Pepsi. I did not look at the Pepsi PERC 26. Well, that's a brutal bar today on Pepsi. I did not look at that. I gotta flip these. All my levels went off too. Does anybody else have that happen with TradingView recently? Like I come in and all my levels are skewed. See, Pepsi, I'm expecting much lower. There's another one. I mean, I wouldn't be surprised to see Pepsi easily trading back to the 150s, easily, over the next few months. 26 PDE. You're going to see like Coke and Pepsi back in the teens before this is all said and done, from my perspective. Well, keep giving me feedback, Waka Waka. Again, cloud's not going away. Yeah, you're going to get some things switching companies. We're going to get pullbacks in all this period with a recession. But that's where, yes, I expect Amazon PE to drop drastically. What I'm saying is it's not going to be a death knell for Amazon. We're going to see the share price drastically cut. Combined that they still lose money on the retail end of the business, and I'm not talking the cloud stuff. I'm talking their sales stuff. So, all right. Well, let's just glance at stuff real quick. I got sidetracked. Again, we have. Oh, by the way, here's how I did the levels. We had the levels up here on this pausing bar this morning. Sterling tweeted out for me, watch for into the rotation zone with European close, and lunchtime we got into, I said watch the 15-minute rotation zone. We got into that, rotated back down. This gave me a pausing bar from today's high, which gave me an intermediate target 39.74, which lined up with a key level of 39.75. And then the 75 to that level, I was watching 39.51 to 39.56, closing right in the middle right there. That's how I came up with the levels. The next major thing, I don't even have to, you can update these if you want. But you're going to guess what my next key level is. 39.20. Then I'll go to 39.09. Then I'll go from 38.78 to 38.83. Those are my levels. That's exactly the same thing I'm going to do. By the way, the NASDAQ coming pretty close to 87.5. You see, also put the lunch pausing bar in here. Earlier in the day, it was up here. And that's where the levels came out. 15-minute rotation zone, as I've talked about, you go in late morning, European close, switch to the 15-minute rotation zone, watch for a move back to the 15-minute rotation zone, and the continuation play, giving me the ability to put on the harmonics. Intermediate area was 12,188 to 12,172. Then it was 12,081.75. And the low happened to be 12,082.25. Next level, 12,054 from the retracement harmonics. And then 11,969, then 11,921. On any bounce, I'm going to be watching the return to the prior harmonic. So in the NASDAQ, it would be 12,188 for overnight. Remember, we got PPI tomorrow. Dow actually hit the 87 at my full levels. I'm not going to go through this with every stock. With 31,263 to 31,202, which was the 87 and a half. We did hit it today. So both the S&P and NASDAQ have a little more downside to go before we hit the probabilities. The Dow already hit it. That doesn't mean it has to stop there. It already hit the bare minimum for the probability. Russell has a fair amount way to go. And by the way, here were your lunch harmonics. It did not. The Russell was actually surprising. I'm surprised it did not hit that, but that's why you put the levels on. Notes. We got the move into 87.5, not quite just 114.19. By the way, just because I'm watching for any buying pattern doesn't mean it has to stop here. By the way, the potential major double is still in play, but that could be invalidated on a substantial push lower. Based off today's price action, though, on a continued sell-off, I'm watching for a retest of the June lows in the notes. Don't need to talk about much else. Dollar index, I already talked about with the intraday break. Definitely you got the close above it and the close above the 62.5. So we should still see continued upside in dollar index 110.395 to 110.785. Already looked at the VIX. We'll glance at that tomorrow morning. Bitcoin, by the way, coming back down. After that reversal between the 52, and I'm still very bearish, expecting Bitcoin to be around 11K before all this is over, at least. But already dipping below the 62.5 and this prior support. Going to still watch where today closes, but I'm still expecting a retest of the lows back from the 8th of September. Tesla holding up decently. If we do get some bounce tomorrow, we'll watch for at least a partial to full gap fill. Other than that, my next key levels are 285.50 and then majors back to 280 with the 50 and the 62.5. 50 period exponential, the 62.5 harmonic from this up move. All right. Let's see. I think that's about it. Where's me? Is this for me? Am I bearish for tomorrow? I could see a slight little pop if PPI comes in better. I mean, I'm still expecting this based off today for some more downside price action. And I got asked this earlier today. The bigger thing is we have the Fed meeting next Wednesday, and we have this will be the biggest OpEx since sometime in 2018 in September. So I'm bearish with the caveat that we could go into some more choppy price action. Would I be surprised to see a slight bounce within the next couple days? It could happen tomorrow with PPI, but any bounce is grounds to setting up a short-term sell. RBLX. So overall, I'm incredibly bearish. Would I be surprised to see some bounce in the next couple days? No. Well, then the other thing going into OpEx is we have that massive 4K gamma strike. So could we trade back and forth in this area? Theoretically, yes. Now, if we really burn through 4K, then I'll show you what's next. RBLX actually held up really nice today. But the key area for RBLX would be 42.76. Then I'd be targeting the gap fill. Other than that, there just isn't a fantastic. So why? Let me just. This technically was a take profit signal today on the close. The only thing, before I could get bullish in this environment, I'd need a daily close above 47.04. You get a daily close above 47.04, I'd stay short term bullish for a reconnection with the 200. Until that happens, I'd be leaning, if the market just stinks with cycles at the top, I'd be leaning at least for the gap fill. And on the short term basis, after that gap fill, here's what I'd be paying attention to: 39.75. This was definitely a take profit on a closing basis after this run up from the way I look at stuff. And it was a rotation between the 50 and the 62.5 of this down move. So unless you get the close back above that 62.5, I'd be very cautious to the upside. We have quad witching next week, I thought. It's next week. Let's see. Hold on. Hold on one second. Is it this? When is? Is it this week? Did I get my weeks mixed up? No, it is. You're right. It is this week. I got my weeks mixed. September. Hold on. Hold on. 1 second. Yeah, it is this week. Sorry, it is this week, not next week. You are correct. I got my weeks mixed up. I was thinking we are still earlier in the month. So we have OpEx this Friday. You always gotta be on your toes. So let's just take a look. We're sitting right at that 4K. The next major strike from a put side, you got 39.50 minus, but the next big one is 3900 if we blow through this to the downside. But we could hover around this area, down a little, up a little, until Friday, since it is this Friday, not next Friday. I was incorrect in my statement. So please do remember that. With that, I'm a little worn out. I am tired. I got to rest my brain. I'll be back on tomorrow, 30 minutes after the PPI numbers, and we will fine tune our trading strategy based off tomorrow morning for the next couple days. With that, I hope everybody stayed safe. Don't do anything silly in these markets, and everyone have a great night. If you found this helpful, please come back and leave a comment after the live stream is over to help promote this for other people. With that, I will talk to everybody later. Bye for